Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EXXON MOBIL CORP quarterly report. EXXON Mobil Corporation offers a diverse range of businesses and services across various segments. The company's primary offerings include exploration and production of crude oil and natural gas manufacturing and sale of petrochemicals, olefins, polyolefins, intermediates, production and sale of fuels aromatics, catalysts, licensing services for energy products, specialty products including plus finished lubricants plus base stocks plus waxes plus synthetics plus elastomers plus resins, trading, transportation and sale of crude oil, natural gas, petroleum products, and other specialty products. Additionally, ExxonMobil is pursuing lower emission opportunities such as carbon capture and storage, hydrogen production, lower emission, fuels, Proxima systems, carbon materials, lithium production. The EXXON Mobil Corp. (EXXOM) stock price has experienced a modest decline of 1.52% to 2.7% over the past year, despite a dynamic balance of significant positive developments and notable challenges. The company's growth initiatives, such as the expansion of its deepwater projects in Guyana and consolidation in the Permian Basin, have boosted production and driven earnings. However, lower crude prices and refining margins, weakness in the chemical segment, and regulatory uncertainty in Europe have posed headwinds. The key factors contributing to ExxonMobil's stable stock performance include robust production growth in Guyana and the Permian Basin's strong shareholder returns through dividend increases, and cost management strategic portfolio enhancements in key regions. However, the negative pressures from fluctuating commodity prices, weakness in the chemical segment, and regulatory challenges emerging in Europe have been mitigated by the company's dynamic balance of positive and negative news. As a result, ExxonMobil's stock price has experienced a relatively contained movement over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the energy segment's upstream operations in both U.S. and non-U.S., which saw revenues increase by 13.9% in the U.S. and 15.5% in non-U.S. Additionally, the chemical products segment experienced revenue growth of 17.1% in the U.S. and 23.4% in non-U.S. On the other hand, revenue decline is primarily attributed to weaker margins, which resulted in a loss of $510 million Q3 and $1,280 million YTD. Expenses also contributed to revenue decline, with a loss of $80 million Q3 and $340 million YTD. Net income and profit margins decline. The company's net income has experienced a significant decline over the past year. For the 3 months ended, net income decreased by 13% from $8,971 million to $7,768 million. This trend continued for the 9 months ended, with a decrease of 18% from $27,108 million to $22,343 million. Profit margins have also declined, with a net income margin drop from 10% in 2024 to 9.1% in 2025 for the 3 months ended, and from 10.1% in 2024 to 9.2% in 2025 for the 9 months ended. The decline in both net income and profit margins suggests that the company is facing challenges in maintaining its revenue growth and profitability. The company's financial performance indicates a strong ability to generate positive operating cash flow. The key indicators supporting this conclusion are a significant operating cash flow of $39,291 million for the 9 months ended September 30, 2025, page 40. A substantial net cash provided by operating activities of $39,291 million, page 40. A positive operating cash flow as of September 30, 2025, with assets exceeding liabilities by $217 million, page 15. These figures collectively demonstrate the company's ability to generate a substantial amount of cash from its core operations, indicating a strong financial position. The company's debt level and interest expenses have undergone significant changes. While the total debt increased by $300 million at the end of the third quarter of 2025, this is a relatively small increase compared to the overall debt level. However, the long-term debt decreased by 10.7%, indicating a shift in the company's financial structure. In terms of interest expenses, there has been a substantial decrease. The interest expense dropped from $207 million in 2024 to $90 million in 2025, representing a decline of 56%. Additionally, total cash interest paid decreased from $1,595 million in 2024 to $1,473 million in 2025, further indicating a reduction in the company's interest expenses. Management is optimistic about the company's outlook, citing several key strategies that will drive growth and success. They believe climate change lawsuits pose a low risk to operations and financials. The company will focus on managing commodity price risk through hedging and diversification, while investing in high-return projects and maintaining a strong balance sheet. To achieve its goals, ExxonMobil aims to reach net zero emissions from operated assets by 2050, reduce methane emissions, and invest in low-carbon technologies. The company also plans to prioritize internal funds for financial requirements, share success with shareholders through consistent share repurchases and growing dividends, and continue investing in lower-emission investments based on opportunity availability and public policy support. Overall, management is confident in the company's ability to navigate challenges and achieve its objectives, driven by a focus on risk management, investment in high-return projects, and commitment to reducing emissions. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In the past 2 years, it has consistently paid dividends to its investors, with notable payments including $12.9 billion in December 2023 and $13.4 billion in September 2024. The company also offers quarterly dividend payouts, with recent figures showing $0.99 per share for the 3 months ended September 2025 and $2.97 per share for the 9 months ended September 2025. In addition to dividend payments, the company has been actively buying back its shares from the market. In the past 2 years, it has spent a total of $44.5 billion on share buybacks, with notable transactions including $14.1 billion in December 2023 and $15.4 billion in September 2024. These efforts demonstrate the company's commitment to returning value to its shareholders through both dividend payments and strategic share repurchases. That concludes the financial summary for EXXON MOBIL CORP. Feel free to comment below, and I will be happy to answer them when possible.